Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. Jam-packed show as always. 1 hour of mortgage real estate talk. We take your calls live here. We've got on the line with us Harry Glanz. Good morning, Harry. Oh, we just lost Harry. He's coming back. Good morning, Kyle Lang. There he is. There's our guest realtor.
Morning, guys. How are you? Thanks for having me again.
All right, Kyle Lang.
Snaps for Kyle.
Properties. All right. Hey, Becky Alley's joining us.
Hi, it's Harry.
Good morning.
Hey, good morning, everybody. Thanks for joining us this morning.
And John Kolb. He's probably somewhere in the middle of the state. Hey, John, what's up?
What's up, guys? How you doing?
Fantastic. Harry's coming back on. He'll be jumping. There he is. Hey, good morning, Harry.
Good morning, everybody. I guess I've been on it such a while. They didn't know who I was, so I'm glad to be back with everybody. Becky, I get to see Becky. I get to see John, Harvey. What's up? Kyle Lang, everybody. So we're all jacked up today because the market, Harvey, is still hot. I mean, went to a closing yesterday. Everybody was there. Was like, they haven't seen a lender in forever. What do you mean you haven't seen a lender forever? Who's sending the money? We're sending the money. That's what we do. We send the money.
The numbers are still coming in for August as we got to the end of September. Their pending sales actually rebounded a little bit. June and July's numbers weren't looking so great. It's just not that there's any inventory out there, Mr. Lang. It's still sort of an issue. We're going to dive into it, talk about the numbers. They seem to be picking up just a little bit here, Kyle. What do you see in your area?
I think they are. Yeah, you're starting to see stuff, maybe even sitting a little bit longer as well. You're not having to write $30,000 over list price for everything with crazy appraisal guarantees. So it's definitely, I don't want to call it necessarily a shift, but the market's definitely different than it was, 60, 90 days ago.
Yeah, some of the buyers are definitely going to probably get back into the marketplace. John Kolb, definitely the summer's frenzy of multiple offers. We never thought it was going to end. Maybe just a little bit of a slowdown. But if you do want to buy a house, you better be prepared.
For sure. I mean, you talk about, it's all about, like, Harry likes to talk about the fundamentals. It's layups, it's the free throws, it's the drills, right? And we talk about a lot of the same things sometimes because we're trying to reach that one person that maybe didn't hear us last week, right? Because it all is the same. It is all relevant. It's the same, but different, right? So we're trying to make sure that we're advocating, and that the conversation starts with us or whatever lender that you do prefer. Obviously, we would love you to work with Capital Mortgage Funding, but either way, we are here to make sure that you know where you start and where you're going to finish. And you start with the conversation, you start with figuring out what your credit is, and then you end with us showing up with some money at the table and some keys that are going to be delivered by Kyle Lang.
Kyle, it gets pretty crazy out there. And because of lack of inventory, when a family or an individual finds a house, they make these sometimes outrageous offers. They are sometimes being driven by this crazy excitement and that they're going to get outbid on the house and they're not going to get this opportunity. But then they get their offer accepted, Kyle, and we get the appraisal back and it's $60, $70, or $100,000. They knew that going into it, but all of a sudden having it in writing changes that emotion. Tell me a little bit about what you've experienced on it. I had one this week. I'm still going to fight through it, but it's interesting how the emotions change. You love the house when you signed it. Now you had a couple of weeks to think about it, and now you got the third party to tell you, the appraiser tells you, hey, that's not really what it's worth in today's marketplace.
Exactly, yeah. It's the classic case of buyer's remorse in situations like that, right? Where they'll do whatever they got to do to get the house. They absolutely love it, but then the appraisal comes back 30 grand light on a $230,000 house. And they're thinking, what am I going to do with this? Where's this money coming from? One thing that we talked about a couple months ago when I was on the show, actually, Harry, I remember people saying, well, I don't want to overbuy on this market. If you own a house right now, you're going to oversell. So it's take that equity out of your current house, put it into that house that you plan on living in for the next 15, 20, 30 years. And is the payment still what you can afford? Yes. Do you still have the cash in hand to close? Yes. Then you still love
You've got to have a longer plan, though, too. John Kolb, it's interesting because, we're taking these calls at night. People need more knowledge and more counseling on it because if your plan is, if you're going to overpay 50, 60,000, you probably might want to figure that you're going to be in that house for 5 to 10 years, maybe to make up that difference. Market appreciation isn't always these double-digit figures we've been seeing. I'll go to Harry for this one, Harry, because you have kids that are in that age where you're buying houses, and I'm working with a lot of these first-time home buyers, or either getting married or engaged, or they're at that point of their life where they're going to make that move to purchase a home, get out of their folks' house, or whatever their situation is. That's where you really need that plan. You don't want to buy a house for how you're living today. You got to look maybe 3 or 5 years down the road.
Yeah, I think it's important, Harvey, now in this time, in this market, with things so crazy and with a lack of inventory. And yeah, there's going to be some more homes coming on. But when you're dealing with first-time home buyers or anybody, you have to have full disclosure up front. It's almost like you have to tell them what's going to happen in a fail-safe situation. They have to have a backup plan. You've got to tell them, listen, you can go in and overbuy, but if the property doesn't come in, do you have that $50,000, $60,000 more to come up with cash? And in terms of the millennial buyer, Harvey, that we're seeing right now, remember, everybody, we just did a podcast about it. It wasn't too long ago, but everybody thought the millennials weren't going to buy houses. They were going to live in dorms the rest of their life and hang out together. No. What's going on now is the same thing that's gone on for generation after generation. Now the baby boomers, kids, the millennials are coming in and they're buying up homes, which is creating a shortage in the market. Great for them, but you have to disclose everything up front to the nth degree. What can happen, what's going to happen, and you almost have to look in the future and try to predict the future too. But that's absolutely right, Harvey. You don't buy a house for the way you live now. You buy a house for the long-term plan and see what's going on long-term. So,
Especially
it's
great.
great.
These prices.
Yeah,
Especially
to
with these
piggyback,
prices.
and to piggyback on that, I actually just had a conversation with a young lady. She's a first-time home buyer. She closed yesterday, she's actually going to close on Monday. And she was like, "Oh my God, I really can't believe I'm actually buying a house. I never thought that this moment would come." And I said to her, "I'm like, I'm going to tell you something that someone told me when I first bought my house when I was 24. You're never ready to buy a home. You're never going to have enough money saved up in the bank, just like you're never going to have enough money saved up for children, right? You're never going to be properly ready in your mind to buy a house. You just almost have to do it when it's that time in your life. The world has a way of just kind of wrapping itself around you and making it where it just works. Like what Harry's trying to say is like, so you have those conversations, you make it a reality, and we're here to see that through and make sure that you're educated, because we're part of that story for the rest of your life. Like, what a great honor for us to be able to say, like, when you're always going to remember that first, second, third, fifth house. And when, we had that conversation, she was so excited. And I was like, thank you for allowing me to be a part of it, but you are going to be just fine. You've taken all the steps. You knew what you were doing ahead of time. And that's what we like.
That's great stuff, Becky, to cap up our first segment here. When we come back, we're going to be taking all your calls. We got so much to share for you. 248-539-9797. Keep it here. Even Kyle's got this unbelievable listing. We're going to talk about that right when we come back.
Hi, Harry Glantz and Dan Burke from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
back here, of course, brought to you by Capital Mortgage Funding, always powered by Fairway Independent Mortgage Corporation, NMLS 2289, equal housing lender. When you want real professionals in your life, we'll put a professional mortgage team together for you, hook you up with Kyle Lang and his great staff over there at RE/MAX Dream Properties. And again, there's so many great agents here in Southeast Michigan. I love the positive energy. There's a whole new, Kyle, and we'll talk about it a little bit here, this whole new positive energy where you agents are, it's like name, image, likeness, the whole thing now. You guys are selling your image and stuff. There's so much competition. I want to work with a guy who's knowledgeable. Look, I love the fact that you're handsome, good looking, and I can see you out on your boat and you got beautiful kids. But I want you to have some knowledge about this housing industry in today's marketplace, negotiation, Kyle. What else? Condition of property, school districts, all the ancillary things that I need to know if I'm buying a house.
Right. It's too often, and one of my biggest frustrations in this industry is it's almost turned into you work with the agent that you know the best instead of working with the best agent that you know and puts you in the best position for success, whether that's writing an offer or listing your property. So it's almost become too personal to at some points. So yeah, people need to understand they have options, and you need to work with somebody that knows what you're doing, because for most people, this is the biggest financial investment they're ever going to make.
248-539-9797. We got some calls to get to. Let's roll off to John in Clarkston. It's first question today. Good morning, John. Thanks for calling. John, you there? Go ahead.
Yeah, good morning. How are you?
Good morning, sir. Go ahead with your question.
I had a very thorough home inspection at my field inspection. 5 other homes previously had less homeowners during the entire journey. So we get into the house, we're into the house a couple of weeks later, and then we start noticing water damage above our sink, and ended up planting black mold in the inside of the apartment for the
Yes.
our lower level tower and with the level of plumbing and all the grout we're using grouted them.
Well, yep. Kyle, he buys a house. He does all his due diligence. Just the fight to even get a house after 2 years. John, I'm feeling your pain. And then you're in the house for a couple of weeks. You guys start noticing things when you move into a house. And it sounds like, what was it? The jacuzzi tub upstairs has those compartments in it. Anywhere that water's been leaking for a number of years. Now he's got black mold, Kyle. Now what?
A lot of people, a lot of inspectors, they have insurance to protect them from that. But if it's behind a wall in an enclosed space where they can't see, they don't have extra vision. They can't see through. So an inspector, they may not be able to come back and help you with that. Then it's, well, did the seller that I bought this house from, did they know about this? But then you have to be able to prove that. So the only time I've ever been able to have someone prove that, and it was almost by mistake, was I had a client that they called their insurance provider because their basement had backed up. There was roots in the drain line. The basement had backed up. Well, they called their insurance company. The insurance company said, well, we were just out there a year ago for this. She said, I only bought the house 6 months ago. And the seller had never disclosed on the seller's disclosure statement about this. So we found this out just because she happened to use the same insurance company that the previous owner had. But it's a matter of, can you prove that they knew about this?
Yeah, it's a bad thing. John, this is going to cost you, I'm guessing, $10,000 to $20,000 for the mold remediation. Where are you at with it?
I had a meeting on it. Yeah, the minimum. And then on top of that, there's the gut of the entire bathroom, and then the kitchen area is directly below that. So we have,
Gosh,
everything that might potentially be affected. So it's going to be probably more like 30,000 or 40,000 if we're lucky.
we're trying to do a show here promoting home ownership, John, and you called in this morning with this stuff, and it's true. It's true. And, we feel bad. It's hardcore, but this is the truth of what's going on out there, folks. You're buying homes that are 20, 30 years old. If you're lucky, most of the homes are older than that. And again, some of the homes, you can't see some of these compartments. It just goes to show you. And John, we're going to be praying for you, buddy. I'll follow up with you after the show and try to find some mold remediation guys that might even be able to help you, or maybe some more answers. But it's just so important to get that home inspection done on things you can see. And then, of course, there's all these other things that can pop up in a transaction. Hey, team, let's go to another call here. We got Jake calling in from Fenton, appraisal, and a question about his appraisal and PMI. Go ahead, Jake. Tell me what you're thinking. Good morning, sir. Good. I think so. I think you're going to get a similar interest rate, and you probably could reappraise the house. Possibly, if you've been there for over a year, the system can tell us whether or not the neighborhood's got enough equity in it. Sometimes the Fannie Mae and Freddie Mac DU and LP loan prospector systems, they will automatically give us the okay to move forward without the mortgage insurance. We'll follow up with you after the show. I think it's worthy that we could run it through for you. There's no charge, and we can see if we can even avoid an appraisal and remove that PMI for you and get to probably the same interest rate or real close to what you currently have.
Well, Harv, yeah, you got to really look at, when talking to somebody like that, we got to really look at and analyze whether it's worth it. How much longer is he going to be in the home? Is now that he's got all this appreciation, is he planning on selling? There's closing costs with refinancing. Where's the break even with all of that? Make sure that we're doing the right thing by you and not just writing a mortgage like these willy-nilly companies out there that like to advertise that they can get loans done in 8 days. Hey, we're here to make sure that we're doing the right thing for you. And if refinancing, more than likely refinancing to get that PMI dropped off is going to make sense. And yes, you're probably going to be able to keep the same interest rate or maybe even a little bit lower, but there's other factors in play. And you can't just willy-nilly, like a lot of these companies do, just say, yep, let's do it. Here's the program du jour. This is what was told for me to sell at the road rally that we were at. Come on, let's go.
Becky, we see these PIWs, these property inspection waivers on refinances. We get them on purchases too, but on refinances, Becky, I'm noticing on rate and term refinances with 20% equity and good credit, you generally will get these PIW, this property inspection waiver. It saves you a little money at the closing table. That's it.
Yeah, for sure. I mean, and also it kind of takes the risk of, because an appraisal is done by a real person, right? The appraiser is someone's opinion of your home, right? You could have one person go out there and use a blue crayon, another person's going to go out there and use a red crayon, right? And, they're going to totally different opinions. So when you have a property inspection waiver, it kind of takes that human element out of it and just saying, hey, this is what the standard property value for your property is. And you don't have to deal with that. So in the caller's case, in the event that he doesn't need an appraisal, and let's just say removing the PMI, possibly shortening the term to a 20 or 15 year, those kinds of things to reduce his rate to get into the low mid twos, that's something that we're going to have a conversation with him about. And if you can remove the appraisal, why not? Why would you, there's, and especially with the way the market's going. And I know Harry loves talking about appraisal, so I'm going to let him chime in on this one.
Hey, I want to be old man Harry for a second, but these property inspection waivers everybody's talking about, they're not being handed out like candy at the corner, okay? It doesn't happen on every single every time we run it through the system. It doesn't happen. So when I hear, oh yeah, we can do your loan in this time and that, no, it doesn't work that way. It's a bait and switch tactic. I can't stand that type of advertising. It just doesn't happen that way. And then when you get FEMA coming out last week, issuing flood zones and caution in every county in the Tri-County area, that now at the end of a transaction, we have to make sure that that property wasn't washed away in a flood, and we have to go out and take pictures on the last day. How are you going to close a loan in 8 days? Doesn't happen that way. In the real world, there's a series of checks and balances and fundamentals you have to go through. So if you're looking to get a property inspection waiver, doesn't happen, not even most of the time.
Harry, you're going to spark some more conversation here. 248-539-9797. We take your calls on mortgages, refinancing, purchasing. We always mention this. Get a professional team. You'll have so much more of a better experience. Kyle, there's so much information out there I think families need to know. I mean, when they hire a trusted man like yourself, you're out there, you're negotiating. What do you find the 3 or 4 things that people right now, you always got the prices negotiation. What else is going out there? What are you negotiating with these families that are selling their homes?
The number one thing in most cases is going to be occupancy post-closing, because in a lot of these cases, a lot of these sellers, they don't know where they're going to end up going yet. And with how competitive the market's been lately, the chance of getting a contingent offer accepted has been really difficult over the last, I'd even say, couple of years. So these people, they're putting their house up on the market on a wing and a prayer that they're going to be able to find something themselves. So I accepted an offer last night with 90 days of occupancy post-closing, and that was just to the benefit of the seller to know, all right, we're going to have roughly 4 months here, if you count the time it's going to take to actually close on the house as well, to find their new place and get them moved into their new their new home. So if you can do, any sort of occupancy, that helps. Strong EMDs are always going to be a good thing to show that you're a serious buyer. Obviously, we never advise to waive an inspection, but a short inspection window is always a good thing to look at as well. 3 to 5 days, get in and get out. If you're working with an agent that does enough business, they should be able to have an inspector that can get you in and get you out of there within a 3 to 5 day window, so you know exactly what's going on with this house. And 2, you have to understand, not every house is going to be perfect, right? So there's going to be stuff that you have to do with every house. It's, what can I handle? What do I feel comfortable taking on? And then, is this house worth it for me to take care of those things?
Unwelcome solicitations when we come back. You're getting those mailers. I got a couple last night. Well, I called on them. Oh boy, there's some guy with his head between his legs still trying to figure out what ran him over last night. These brand new loan officers, boy, they didn't know anything. Anyways, I'll tell you my story when we come back. 248-539-9797. Keep it here.
Hi, Harry Glanson Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Welcome back to the show. Hardcore Mortgage Real Estate Business Show in our 22nd year. Coming up on our 23rd. We appreciate all your calls. 248-539-9797 live here in the studio. After us, it's going to be a whole day of sports here. We got Pat Caputo jumping in from 10 to 11, then Michigan football with the pregame. Who knows after that? Cost all the other guys later in the day. Maybe some Tiger baseball too. Who knows? 248-539-9797 here in the studio. We've got everyone on board with us. Harry Glanz, of course, Kyle Lang, and Becky Ailey and John Kolb. Lots of information to share with you if you want to join the show. So we always like your phone calls. Hey, Kyle, we didn't get back to that great listing you have, but I saw it last night because I was checking you out a little bit. New house on the market here in Southeast Michigan. Just tell everyone about it.
Yeah. The address is 29216 Perth. It's in Livonia, right at 5 in Middle Belt. Livonia Public Schools as well. Beautiful 3-bed, 1.5 bath colonial on a private, little quiet cul-de-sac. Really good sized yard. If you get a chance, check out the pictures online. It's a beautiful house. There's going to be an open house actually tomorrow from noon until 3. So please swing by and check it out, and hopefully you fall in love. As long as these owners have been there for 31 years, raised their family there, and they're just ready to downsize, get that first floor master, and get everything moving.
Yeah, that's great, man. You don't see too many houses like that are in great shape like that. Again, the guys lived there forever. He's taking great care of the home. Great backyard, 3 bedrooms, 1.5 bath. It had some finished basement area. Man, those are winners. And the kitchen looked like it was updated too. That's on Perth Street out there in Livonia. Anyone listening? Again, a lot of great homes out there in the marketplace. I always invite real estate agents to call us up. If you got a great open house you want to tell us about, we might get you on the air with that and give you a little extra exposure. So don't be shy. 248-539-9797. We got a great team on board. Hey, the party leaders are trying to forge out a deal. You keep hearing it on the headlines, though. They're trying to come up with a new infrastructure loan transaction here for the United States to keep things moving. This infrastructure bill, of course, is going to do all those improvements we need. But boy, whether or not they're going to come to an agreement on it today or tomorrow, that's why we urge you, because the market can shift real quickly. Becky, I'm going to let you comment on that. Interest rates still hovering at all-time lows, but we saw a shift over the last couple of weeks. Maybe they'll trickle back down again.
Yeah, there definitely was a pretty significant jump from, last week to the week, prior to that in regards to, just anytime the government is chatting about anything, it's going to affect what the interest rates are doing, because you have the fear mongrels, right, that are going to dictate what's happening. And, so time is always of the essence. We've been talking about this for a year, COVID-19, the silver lining of that, obviously there's a lot of bad things that came with that. But the silver lining was that it did have a positive impact on interest rates, which allowed a lot more people to be able to take advantage of home ownership, refinancing, things like that. So if you hear about the rates shifting, you might already miss the boat. So don't be a looky-loo. Don't wait for the market to settle if it makes sense for you now, because like we keep preaching, like we can't control what's going to happen. All we can do is just kind of put that information out there that if it makes sense for you now, do it, because, 3.5, in 6 months from now, you're going to wish you would have got 3%, 3.125. I mean, and that's just how life goes.
Do a little mortgage talk. Yep, go ahead, guys.
No, to piggyback off of that, Becky, I had a situation where I had some clients that they got a new job. They're moving out of state now. And so we're selling their house here in the Metro Detroit area. And they didn't think that they were going to be moving so quickly. Well, they refinanced like 6 months ago, and they wrote all their closing costs into the refi. And so they lost like $5,000 in equity that now that we're trying to sell their house, they're $5,000 light. So like Becky and John and Harry and all these guys always say, like, make sure it's right for you. Just because interest rates are low, like if you're going to sell your house in a year, you might be giving away $5,000 right now to save yourself $20 a month over the next year, So just pay attention.
I promised Harry I'd behave here, Harry. I did mention unwelcome solicitations prior to the last break. Zero concept on life. You told me don't bash any people in our industry. I won't bash them, but Kyle brought it up, so I'll piggyback on that, what he said. So the guy last night's want to sell me this unbelievable low interest rate with like $12,000 in costs. Yeah. Just doing the basic math. Anyone listening out there, these brand new lenders, I don't know where they came from. I did the basic math on what he was talking about. Oh yeah, the rate sounded really good. It would only take me about 12 years to break even. I might not even be in the house for that long. And most families, as Kyle mentioned earlier, we've talked about, you can get rid of your private mortgage insurance. Many families out there might want to refinance 2 years from now to get rid of the mortgage insurance. So many reasons why not to get involved chasing some low interest rate from Harry, what I call an unwelcome solicitation here. And I got one in the mail also. I'll let you wrap that comments up.
Well, Harvey, it's like this. I mean, we do this for a living every day. We're very emotionally involved in it. And I think to take the emotion out of that when you hear it, all you have to do is do the math. Just do the math, divide the number of months of savings that you can get into how long you think you're going to be in the home, and you'll get your recoup costs. And if it doesn't make sense, don't do it. Okay. If somebody's quoting you a 1.99 interest rate, you're paying $12,000, $14,000, $15,000 in costs for it. So, you just have to do the math. I'm going to go to John in a second. Take the emotion out of it and do the math. John Cole.
Yeah, Harvey, you can't bash those LOs that are working at the drive-through mortgage window. I mean, they're just listening to their manager of the colored highlighters, right, Becky? I mean, they're just doing what they're told to do. They don't have any concept on how to do the job and figure out what's best for the client. Harry's fuming right now. I love it. It just plays off our podcast from Wednesday, back and forth. I love it, giving him a little bit of trouble. And, hey, we're out here to make sure we're doing the right thing for people and making sure your scenario makes sense. I had a conversation just the other day with a guy that's in a 6% interest rate, but guess what? He's got 7 years left on the loan. We ran the amortization schedule. The interest that he's paying each and every month, the 7% doesn't even matter. I could put him in a 2% interest rate right now, and he'd be paying more interest. So
right
at that point, like Kyle said, like Becky said, the interest rate doesn't even matter anymore. You got to take that scenario and analyze it. You get those rinky-dinky people out there saying, 7%, let's redo it on a new 30-year at 2.5. Well,
right, not always.
So John, what you're telling me is you did that math because you took the remedial math class at West Bloomfield High back in the day, and you could count 1 + 1 is 2. I mean, that's good. I'm glad everybody knows that.
I'm glad that
not everyone knows that, though. That's the thing. Like that, not everyone knows that. And like, to the point, to wrap this up, is you can call enough people and someone eventually is going to tell you what you want to hear. Okay. 1.99 sounds really cool when you hear it over the phone, right? But then when you get it in front of you and on page 2, it's showing $6,000, $7,000, $8,000 in closing costs that I know is going to be there. John knows going to be there. Harvey, Harry, even Kyle probably would know that it's there. And you're like, oh, no, the closing costs are not going to be this. Get it in front of you, because I guarantee that if you're hearing someone tell you a rate of that kind of stature, there is for sure going to be an exorbitant amount of closing costs attached to that. So you got to make sure it fits you. It's not the soup du jour, like in Dumb and Dumber. I'll have that, right? You got to know what you're getting into, right? And that's what we're here for.
No doubt. Hey, let's circle back. And I like that energy in that conversation. Again, folks, if you hear that boiler room, anyone listening, you hear that boiler room thing. I could hear it in the background last night with the nonsense and everything. That's usually probably get away from those script readers, we call them. And it's just they're running you down a road that's just going to be hard to get out of if you go to sell the house, as mentioned by our real estate agent friends. Hey, how about this? John Kolb, you jumped in earlier and said, Harvey, hey, you know what? If someone does buy the house and they don't want to live there, they might be able to use that as a rental, because we talk about getting that first mortgage, is the all-time low interest rates. Boy, that same house rents for another $300-400, John, versus buying it.
Yeah, I mean, here, just because you may only be living in the house for a year or two doesn't mean it's a bad idea to buy or not buy. I mean, you got to really look at your scenario, talk to your team, talk to your accountant. Maybe you get some tax write-offs for the purchase and the closing costs to purchase a home and the interest that you have on the loan for the next couple of years. And then if you break even, at least you have the tax advantage. Everybody's scenario is different, and you just got to figure it out. There's no just one way to do it. Otherwise, we would all be doing it that way. So figure out your own scenario, talk to your team, make sure you're asking sound advice. You'll get some advice that you don't agree with, but you can pick pieces out of that you're going to use for later in life. You'll get some advice that you do agree with. That's what you have to do to make sure you're making an educated decision.
Kyle Lang, Remax Properties, inventory down this year, 23.8% from last year. How about this? Down 55% seasonally from 2019. Man, that inventory is still on the low side.
Yeah, we're definitely still need your listings. We're still looking for people that are interested in moving. But I found, at least for me specifically, my fall and winter is usually just as busy as my spring and summer. So more stuff's coming. And I tell a lot of my clients that too. Like, houses are like buses. There's always going to be another one coming that's going to check a box for you. So just sometimes you got to be patient, but we will see more inventory that'll continue to hit the market on a weekly basis.
That's good stuff. Hey, some great news. If you want to join the show, 248-539-9797. We are brought to you by Capital Mortgage Funding. Reach us all day long, all weekend long at 1-800-LOW-RATE. That's 1-800-569-7283, the best mortgage bankers. We come back, all of your calls, 248-539-9797. We'll be
Hi, Harry Glanson Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
awesome day outside and a little rain tomorrow. So get out there and enjoy. This could be the last one for a few. You're listening to the Hardcore Mortgage Real Estate Business Show. Again, brought to you by Capital Mortgage Funding. We got some calls to get to, 248-539-9797. If you want to hear from us, again, Michigan State football tonight. Michigan football right after our show here. We got Pat Caputo for an hour, and then we'll kick right into some Michigan football. So we're looking forward to that. Sam out there in Brighton, good morning. Thanks for joining our show. Go ahead, Sam. Thank you. No, a little different. I'm going to let my staff jump in on that, but keep going, Sam. You got good stuff. Interest only. Oops. Sam, I'm going to let John Kolb answer this, but first I want to congratulate your daughter and you guys. I love the relationship. It sounds great, and I'm glad she's buying a house. And can she teach my daughters how to save money? Because you've done a job well done. But Sam, let John Kolb tell you why a mortgage is going to be best. John, you go.
Yeah, I think putting some.
Oh, get that volume up, John.
Oh, sorry. Sorry, I had you on mute there. I think just having a fixed rate mortgage is probably a better idea for a new homeowner. I understand what you're saying with the HELOC and being able to, every payment knocks the payment down a little bit, but let's be realistic on a brand new college grad and how much she's actually going to be throwing at it each and every month versus the variable danger that comes with a home equity line of credit. She may have saved $60,000, but now she's in the workforce. She's got to get out there and spend a lot of money doing other things. And I think getting her on a fixed budget is probably the better plan to do. Now, at that point, and my next thing would be, if it were my daughter, I wouldn't necessarily throw her into a 15-year fixed. The difference between the interest rates on the 30-year and the 15-year are only about 0.5 to 0.75%. So why put her in that higher payment for a guaranteed higher payment when she could go into a 30-year fixed, show her how to pay extra to principal and have it and pay it down into your own 15-year, but always have the option of having the cheaper payment if she ever needs it. You're right. She's been great. She's a great saver. She's going to keep doing this, but let's set her up for success and not put her behind the 8 ball if something were to go sideways on her.
Let's go to Sam. Sam, respond to that, and then we'll go to Becky Alley. Great call. Thank you. Becky, wrap that up for us. Thanks, Sam.
I mean, I'm a saver too, right? And it's something that I've always done. I've always been, cognizant of it. And you always want to live under your means and even at your means. So I understand where, her dad or, the caller was understanding that, like, he's trying to, his daughter's a saver and he wants to put her in the best program, but it's better for her if she's just now, you can save a lot of money when you're not really in the workforce and you're just doing your thing and whatever. Right. But the point is to make sure that she is prepared and she's able to do it, because she can always put extra money towards a standard mortgage, but it's about setting her up for success. And as long as she can handle the minimum payment, then she can control the maximum payment that she wants to pay while she's still able to save her money and let that lower interest rate work for her as well.
That sounds good, man. And then also there's a 20-year fixed in there. We could run the numbers on a 15, 30, and a 20 just to take a look at it. Great advice, guys. Here he glance.
Yeah, but Harvey, I would tell you this, and I hope Sam's still listening, and Becky and John hit the nail on the head. Number one, lock in a low fixed rate right now. Never have to worry about the rate again. You lay your head on your pillow, you're done. That's number one. Number two, his point, she's a big saver. The great thing is she can always take that money that she's saving, no prepayment penalty, right? So you can take more money and throw it down on the balance. That's number two. And number three is, what happens if real life events come into play and she can't save as much money? The variable rate, it's going to go up. Lock in that rate now, put your head on your pillow, throw additional payments at it. Keep it simple. Sam's trying to play the arbitrage game. Forget about that. Lock in the rates right now, lay your head on your pillow. It's over and it's done.
Great stuff, guys. I like the feedback on it. A great question from one of our listeners. So good stuff. 9:50 just morning. Joining us here, it's the Hardcore Mortgage Real Estate Business Show again in our 22nd season. We love when we get calls like that. It shows that you guys are listening out there, learning and doing the right things for your family. That's what it's all about. Let me just sneak in some conversation about refinancing before we go back to Kyle and talk about home purchasing. Again, guys, these are your opportunities. We will see these rates bumping up. There's already talk in the town this morning. There's a magic elixir out there, Harry. Maybe a pill that's going to cut the pandemic, maybe at least some deaths down. Things like that, will move the economy moving forward. And again, we got to be careful as we watch this infrastructure bill and other things. Jobless claims are still, there's still people out of work. So that's sort of hurting things. And it's interesting to all of us as we know that the jobless claims are still up there. And we see so many businesses closing early and they can't staff themselves. So it's pretty interesting what's going out there. Is Kyle, everything changes in this world. Again, you're a younger guy, a young family starting off. You could probably go back and think of the things you were thinking 5 and 10 years ago. Things change, what your wants and needs are, even on a house. And maybe, Kyle, some of your young buyers, they might even start off saying, boy, these are what our wants are. And once you get them out there, they're like, you know what, we'd be okay with something a little different.
Yeah, and I want to send this message actually to the people that are looking for that second or their third home to kind of go off of that.
Yeah.
I have found, I've been in the business for coming up on 6 years now. So I've worked with a good portion of my clients that maybe I helped them buy that first house and then we listed that we're buying their second house. You would be amazed how actually less picky I find buyers to be for that second house versus the first house, because they already know what they want in the beginning. So we're not even going to go ahead and look at something else that might not work for them. And we'll go out, we'll look at 3, 4, 5 houses, and usually 2 of them are something that they could say, hey, this could work for me. I can see myself living here. So if you are a current homeowner and you've heard about how competitive the market is and how hard it is to get an offer accepted on a house, and you're hesitant to list your house because of that, I would say just know it's going to be much easier than you think to find you that next house, especially if you bought your house 2, 3, 4 years ago, you've probably got some really good equity right now to be able to throw at that new purchase.
Always, we do our shows Zoomcast. We can bring additional guests on. But I do apologize for a little bit of the quality of the audio, but thanks for hanging in there on 97.1 The Ticket. Again, we got Pat Caputo coming up with sports. That's going to be loud and clear as we're talking sports here all day, including Tiger baseball a little this afternoon. Hey, a little nice piece out there is Fannie Mae announces that they're allowing, and they started this in the last couple of years, where your rent payments can be included in your overall credit. So again, government trying to extend credit out there to a lot of the families out there that haven't had opportunity. Home ownership, really a great way to build wealth as a family, accumulate some wealth through ownership, as homes typically appreciate. You can have a roof over your head. You can own a house free and clear. And things like that are what really help families have that equity and that equity position to consolidate that, send kids to college and all those great things. So again, you got to make sure you're documenting things in life. So if you've co-signed a loan for your daughter or your son or somebody on a car loan and you're thinking about refinancing or buying that house, make sure that they make the payments on the car loan and that you keep all the canceled checks. And that would go the same with your rent. So if you're currently paying rent to a landlord and not a big community, an actual apartment complex, for example, you're renting an individual house, hang on to those checks. You cannot pay in cash. I'll say it one more time out there. Don't pay in cash. Pay by using a check or money order where you can document that you made timely payments. Hey guys, that music says that we're all done with the Hardcore Mortgage Show just for today. We'll be back next Saturday. Kyle Lang, want to thank you a lot. Hey Kyle, you're always great. Kyle did the show from Savannah, Georgia. Did I say that? All right, I threw it out there, Kyle. You're allowed to get away.
Yeah.
But with that in mind, we apologize for the audio, and we'll get you back for next week. Again, Pat Caputo, he's on the On Deck Circle. Keep it here on 97.1 The Ticket. We will see you next week.